I'm not going to talk about the euro yen because the chart doesn't make much sense, but I've got to say the levels did work really well. If you were scalping, I think that 128.00, 129.00 buy and sell opportunity during the week, that was all you needed to do all week. You know, that trade really did work. So happy with the levels, but the chart doesn't make much sense to me. So it really is a case of just scalping the levels in that euro yen while they're working. British pound pairs I'm not going to bother with. I don't want to try and make sense of Brexit. And I think there's better things to trade rather than gambling on the next Brexit headline. Gold is actually a waste of time as well. Well, it's working if you're scalping. The levels are working. The 12.20 level, I think I had that. Yeah, I've had minor support at 12.24, 12.25, and then 12.19, 12.18. On the upset, I had first resistance at 12.28, 12.29. So if you're sitting there being really active, taking 3 or 4 points out of each little move, that's working fine. But if you're asking me which way we're going to go next week, I haven't got the faintest idea. We are just about in an upward sloping trend channel. So if I have to tell you what the trend is, I would say it is gently bullish. But there's just no reason why we can't dip down to the low 12, the 12, you know, the 12 teens, the 12.13, 12.12 area. We could even retest this trend line down here at 12.08, 12.06. No reason why not. We're right in the middle of the channel. There's no clear indication of what's going to happen next, so I've got no idea for you as a swing trade. Silver levels have also worked. I had I had 14.45, 14.50 as my sell level all week with a stop above 14.55. So let me see now. Monday I don't think we quite made it. No, we got to 44. Tuesday we got to 14.49, so hopefully you sold it there. Wednesday we certainly had a chance because you traded up to 14.55, but hopefully you didn't get stopped. Thursday again we had a chance and we stayed below 14.55, so you would have hopefully held on to your short, and if you held it through to Friday you did really well because we dipped all the way down as far as minus support at 14.20, overran a little bit to 14.15, but a decent enough move there by Friday for you to take a profit out of a short if you were still holding it. This doesn't look particularly positive, this chart, does it? So I would favour a move to the downside, but we made the most of the levels that we could. This would be a lovely chance if we, by some miracle, managed to get up to 14.65, 14.75. That would be a terrific short position, but I don't really see that happening. I think it's fair to say that the S&P is working quite well, just on scalping levels at least. Into the end of the week, we had a resistance at 26.70, 72 on that little bounce, so that worked well if you managed to get into a short. And then by Friday, we dipped. Now, we're heading into some very important support levels. We've obviously got this trend line going back to April, so that's going to be important when we join up these two little lows for the year. I think that's for the year. Let me just check where we were in January. No, January got a little bit lower, but I'm using this as the lower trend line for the channel. So 26.10, 26.00 is obviously going to be important. That 26.00 ties in with the October low, so we're going to use this trend line. 500-day moving average at 25.80, that's going to rise just fractionally by next week, 25.81. So it's only below the 500-day moving average that I'm going to say this is a whopping great sell signal. And we really would want to have a swing trade short there. But for now, we've also got the 100-week moving average, which is rising up to 25.95. So real good support around 25.605, 25.95. You've got to try along. I like you following social media, and there just seems to be so many calls for the market to crash. You know, the talk of, you know, these higher interest rates pushing the stocks lower. We've had these FANG stocks getting walloped, oil collapsing, a lot of commodity markets lower, and there's I think there's just too much bearish talk out there for this market to actually fall. I've never seen a crash happen with so much bearish talk. Crashes really, in my experience, ever since 1987 when I started trading, have only occurred when no one is really talking about a crash. So I think this is a buying opportunity. If I'm wrong, we'll get stopped out for a relatively small loss, and then we can reverse into a short because there is significant downside. But those are my thoughts. Yeah, I do fancy a bit of a Christmas rally for the stock markets. Now, Bitcoin, I won't spend long on this. Very oversold, but there's no reason to buy it. I don't think a slightly bullish candle on Friday, but really you're going to need way more than that for this market to reverse. I think we haven't seen any significant bounce. It looks to me like the whole market is in a state of panic, and maybe these bulls are finally giving up and realizing that this is just a pile of rubbish. There's nothing to say. In the very, very short-term charts, we've got a descending triangle. I'll show it to you just There you go, 30-minute chart, shows a descending triangle. So this is negative. Assuming we hold this upper part of the trend of the triangle, we'll head back down towards 4,000, break below 4,000. Obviously the next sell signal. We're going to have to get up through 4,500 for a short-term rally, but this is a 30-minute chart, so this isn't the start of a bull signal, even if we get through 4,500 I'm just showing you the descending triangle. We had a much bigger descending triangle on the daily chart. There it is, from May through to November. I was screaming about this on Twitter and telling everyone how the market was going to collapse, and descending triangle was bearish and blah blah blah. For some reason, some idiots thought that we were going to break higher, and it didn't. That's it. Okay, if you remember the S&P chart I showed you a few minutes ago, you can see that the Dow Jones is tying in quite nicely. I've got too many trend lines on here, but anyway. You can see that the Dow Jones is tying in quite nicely with the S&P, in that we have got some good support here. From the 23.6% fib at 24,230, 220, and we've got this lower channel trend line, which we've closed bang on. So we didn't bounce off it on Friday. Now, if we open below 24,200, that won't be a good sign. But I would wait for the break below the October low of 24,086 before I start getting negative. We could just have a little spike down, get rid of any weak longs, and then reverse up. We are getting oversold on the daily chart. So I'm still going to stick at, basically, it is worth trying along at this important support level, because there's so many bears out there. If they do get squeezed, we could really see a nice run up quickly to 25,000, 25,500, maybe even the 26,000 area. So the potential for this, for a bull, for a reversal, there's a lot of profit potential in the trade. So it's worth taking the risk. Okay, you're going to risk a couple hundred points, no big deal. And if I'm wrong, all you do is reverse into a short, and then we run it down to the 500-day moving average at around 23,200, 23,100. Let's just have a quick look at the weekly chart. So either way, we're going to get a move. As I've written in the report, it is make or break time for this index, and I'm going to bet on a bounce. Yeah, 23,325 would be a good target on the weekly chart, and then on the daily chart we've got almost the same, just 100 points or so lower on the 500-day moving average. So yeah, either way we can get a 1,000-point move. So let's bet on a 1,000-point jump, and if I'm wrong, we reverse, and then we bet on a 1,000-point drop. On that note, if you're an options trader and you know what a straddle or a strangle is, volatility is probably quite expensive, so it may not be worth putting on. But that's the kind of time when you put on a straddle or a strangle, because you know you're going to get a decent move in one direction or the other. But you're not sure, so that's when you start buying put and call options together. Right. DAX chart. Now the DAX chart shows potential for a double bottom, which is bullish. We've managed to hold the previous low set in October. We are oversold, and the stochastics are just turning positive. And with all the negative talk out there, I wouldn't be surprised to see a short squeeze, as I explained. Now, I did have 11,000 as an important support level, purely because we have a trend line going all the way back to, is that 2011? I do believe it is, 2011. So that is a 7-year trend line. It is mega important, and it is holding, and we have a potential double bottom, and we're oversold on the weekly chart. And there's so much bearish talk out there. Yes, I am bullish. Now, if you did buy around 11,000, I think we got to within like few ticks. There we are, 2 ticks of 11,000. Absolutely beautiful. So if you're holding along, you should feel pretty comfortable. There's really good upside potential. I mean, there's no reason why we can't get up to 11,500 just to start. On the weekly chart, again, we've got this head and shoulders with the neckline at 11,450 now, 11,450, 11,500. So if we start pushing significantly above 11,500, that's going to show that this pattern has failed. And I've seen so many failed head and shoulders patterns lately that it wouldn't surprise me. Probably most of the traders are focused on this, thinking this is going to collapse, we're going to get a crash, and they're all short. So it's going to be a really nasty business if we start pushing up through 11,500, 11,600. They're going to get squeezed, and we're going to rock it. This is what I favour. So hopefully you're sitting on a little long position, and it is worth it, because if we get anywhere significantly below 10,900, again, we just reverse into the short and look for a big move down. Even the FTSE's holding some good support. We've got the 38.2% fib around 69.55. Where did we get to on last week? The low was call it 6,900. So only 50 pips below there. But the main thing is we've also got 200-week moving average, and we've also got this trend line going back 2 years. So there's a lot going on there, and it has held, around 6,900. We bounced back to 69.55. So as long as we hold above there, that's looking pretty good. It ties in with what I'm seeing in other stock markets. Yeah, I really do fancy a rally in these stocks, and it's worth holding. We have a potential inverse head and shoulders. Well, it's an awkward one, so I'm not really going to focus on that. But, okay, that's my theory. We'll see what happens. Good luck this week.